And Stephanie, just what you hear from Target on these numbers, I guess same-store sales up 4.2%, but when you wrap in the digital comps that were up by more than 100%, it gets it to better than 17%. What do you think?
Good morning and Happy New Year. These are incredible numbers, absolutely incredible numbers. And you have to give Brian Cornell all the credit in the world because he was able to shift. We know their business. We know that they had a lot of hard lines. They had a lot of apparel too. They didn't have as many consumables as, say, like a Walmart or some of the other stores like Dollar General or Dollar Tree and that kind of thing, or Family Dollar. But they were able to really shift around the mix and absolutely encouraged by the traffic numbers. Last quarter, traffic was up 4.5%. So November, December, what they just released at 4.3%, very, very encouraging in a world where no one's really going out, right? Just imagine when we actually reopen and people actually go back to the stores. And so I think these numbers are fantastic. The company is best in class. You mentioned same day, really very impressive numbers on same day. Digital, they've really transitioned to on the digital side. And I really like this Ulta transaction, which no one's really talking about. 70% of Ulta customers go to Target, 24% of Target customers go to Ulta. So can you imagine those synergies? And that hasn't even kicked in just yet. So I think there's a lot to be excited about. The only thing, Becky, is the stock was up 40% last year, and it's already up about, I don't know, 13% this year. So its expectations are quite high, but I still like this story very, very much. I actually am an owner.
Well, as you mentioned, look, the stock's been up pretty sharply. Expectations are very high, and that might be why you only see the stock up by about 10 cents right now on this news. The question that everybody always asks and has been asking for months at this point is what happens after the pandemic when they no longer have the many advantages that they have relative to other retailers right now? And I think that's a big part of the question is what do you think happens? Once consumers have changed and used some of these services, do they go back? Would they rather be in store, and would they rather shop other avenues at that point?
Well, it's a very good question, and it's hard to answer. But that's why I kind of highlight the other things that the company is doing and focusing on digital and focusing on the Ulta partnership and focusing on their mix of business and having a better balance between consumables and apparel and that sort of thing. They've done a great job in merchandising, by the way, on the apparel side. So I think that the numbers obviously are very, very strong because of the pandemic, but I do think this is going to continue, maybe not to the extent, but they're a winner. They're a market share taker. And I think that does not change. And oh, by the way, remember last quarter, gross margins, they were actually up 80 basis points. And so I think they're also doing a very good job in terms of inventory, shrink control, cost cutting. So they're doing all the right things. And so maybe the numbers aren't going to be as dynamic going forward, which is one of the reasons why you and I have talked about TJX, where the expectations are so low. But I think at this point, Target is a winner and you want to own it.
Stephanie, let me ask you about those comments from Walmart, because that's a big issue. It's reflective not only of Walmart, but Walmart is kind of America. You know, it's 10% of total retail sales. And if they say their core customer is really feeling the pinch and is already doing things to try and stretch the budget, things like switching from private label or switching from national brand names to the private label things so that they can save some money, or buying smaller packs of things, that's got to raise concerns not only about what it means for Walmart, but also what it means for any of these big national brands. What do you think overall this is indicating? We know there are kind of two economies out there. How big of a factor is this going to be?
There are definitely two economies out there, and this is one of the reasons why we just got a $900 billion fiscal package, right, to help that bridge between now and when we actually get vaccinated. So that was very, very important in my mind. And oh, by the way, there's speculation that we're going to get even more fiscal, right, coming down the pike to help where it is needed. So I'm not surprised. It's a very challenging time for some parts of this economy and some consumers as well. I am encouraged, Becky, that we have a 14% savings rate. The historical average is 5%. If you go from 14% in savings to the 5% average, that's $1 trillion in pent-up spending demand potentially. So let's get through this. Let's get vaccinated. We have to have a little bit of patience here. But I am at least pleased that we got a fiscal to help some of the people that are really suffering.
Shepard Smith here. Thanks for watching CNBC on YouTube.